Welcome to the Liberty Portal podcast by libertyportal.com, your gateway to a free society. On this show, we examine current events through a libertarian lens, seeking truth, cracking jokes, and providing you with better arguments to advocate for a freer world. The show is hosted by David Rand, political strategist and philosophy nerd widely known as the devil of Montana politics. Henri Pellerin, Liberty Portal founder and editor, entrepreneur, and fitness enthusiast. And myself, Joe Sheehan, filmmaker and Liberty Portal producer. Welcome back to the Liberty Portal podcast. We are here at our lovely studio in Bozeman, Montana. And very, very importantly, we've got our good friend, Brad, visiting us today all the way from Colorado to talk about all things banking and finance and economics. Brad, how you doing, buddy?
Not bad, guys. It's good to be here in the studio with you, at least virtually.
Well, we're glad to have you. Obviously, we would love to have you in person, and maybe someday you can come visit us again. But,
someday.
Yeah. For now, we're doing what we can. So let's just jump right into it. Why don't you kind of set the stage for us in terms of a little bit, whatever you can or are willing to share about yourself and what you do, your background, and kind of what why you're interested and also qualified to talk about some of these topics today.
Yeah, I guess to start, my background is in economics. I studied economics in college, have been a big fan of Austrian economics for a long time. And for the last, call it 10 years, I've worked in financial services, in hedge funds in New York City, and since then in corporate M&A for a financial services company. So I generally get paid to pay attention to the financial markets and have a lot of strongly held opinions about the craziness of the world.
Well, and we want to get into some of those strongly held opinions. With that, where do we find ourselves? Obviously, a couple of weeks ago, we had this banking crisis start to unfold with the collapse of Silicon Valley Bank. And then since then, other banks have collapsed and have also been purchased by other banks. And it seems like there was a domino effect getting started and maybe is still underway. I'd love to hear your thoughts on that. Where do we find ourselves?
You know, it's hard to, you don't have a crystal ball, but it feels like we're in inning 1 or 2 of this crisis. There are a lot of things that happened to lead up to it, but, when Credit Suisse, one of the largest banks in the world, gets forced taken over on a Sunday evening by the other large bank in Switzerland, they changed the laws last minute, such that shareholders don't even get to vote on the takeover. And the takeover happens at 70% below the closing share price the Friday before. Typically, this is not a good sign for the global economy. And it's going to be interesting to see who is next in line. Some of the other banks in the U.S., it seems like they have quieted down recently. But First Republic Bank, as an example, has $200 billion in assets, and the equity is only worth $2 billion. So 1/100th of the total assets. So there's not a lot of room left for things to go wrong at a number of these banks, including First Republic. And it feels like probably in the next 6 months, we're going to see a number of additional banks in the U.S. start to tip over.
So one of the things that was kind of confusing, and when we covered this on the podcast before, I don't think we did a good job explaining why all of a sudden these bank assets are less now than they were a year ago or 2 years ago. Could you kind of explain that to us?
Yeah, and what's most frustrating about this to me is there's still a number of people debating that it's just a shitty management team, poor risk controls, a handful of people that are bad actors. But if you go and look at the data, it's not even a chart crime. You can map the balance sheet of the Federal Reserve to the deposits at commercial banks, and they are in lockstep over the last 10 years. And the simple fact is that QE is the reason that we have all of these deposits at banks like Silicon Valley, at First Republic. It's fast money, but it didn't exist 2-3 years ago pre-pandemic. And so all of these policies, QE and fiscal stimulus, ended up as deposits in these regional banks. And just because these banks at the margin are folding, I guess the way I like to characterize it is, as the Fed raises rates, the tide starts to go out and you get to see who's swimming naked. And the guys at the margin, the most levered banks, the ones taking the most risk, they're the naked ones today. And the direction that we're going is a lot more are probably naked, and we just haven't seen it yet.
QE, could you define that real quick?
Yeah, quantitative easing. The Fed steps in and buys treasury securities from these banks, puts the treasury securities on their balance sheet, and exchanges those securities for cash. Those are deposits. They end up not paying much interest at most banks, and it's a risk-free asset, but it's not yielding anything, and it causes speculative behavior. People have to go out and reach for yield, buy other assets, and that's how they conduct monetary policy. But it has unintended consequences.
And if for folks who are still trying to catch up, what's a treasury bond?
The treasury bond is the primary way that the government borrows money. They issue you a treasury bond, you give the government cash, the government spends it in deficit and promises to pay you back with interest over time.
So they issue those bonds, a new debt obligation, and they exchange that for cash. These banks hold all this bonds, and then go ahead.
The Fed ends up holding, through QE, the Fed ends up holding the bonds, and the banks are left with deposits. And somebody has to hold those deposits. And in general, people don't like holding zero return assets like cash or deposits in the bank. So through the course of QE, we saw all the valuations of treasury bonds, of real estate, of the stock market, of the overall bond market get bid up to extreme valuations. That was the impact of QE. And one of those unintended consequences was massive deposits that can move overnight sitting in the U.S. banking system.
Fascinating. And so I think a lot of people listening to this who might listen to our show and not be so close to this issue might be wondering, why is this relevant to me? Why should I care about this? I don't have more than $250,000 in the bank. My deposit is insured by FDIC. How does this impact everyday people?
Well, the good news is you can actually generate a return by taking very little risk. For the last decade, it has been impossible to earn interest on your savings. It's been 0%. You basically lose to inflation every year unless you go take risk in the stock market. And that's honestly a positive story for most people. You can go get a certificate of deposit, lock up your money for 1 year and earn 5%. And we haven't seen that in almost 15 years. So I think that's positive news.
What's a certificate of deposit?
It's just a basic instrument that you can go and sign up for at a bank. And you promise them that you're going to leave that money there for a year. And they'll pay you 5% to do that.
Brad, I'd like your opinion on this because this came up when we were discussing it last. Wondering between ignorance or malice, which is maybe more of a driving factor that's going on here. I mean, we saw that there was an executive at Silicon Valley Bank who was previously an executive at Lehman Brothers before they collapsed. Obviously, there's a lot of people switching positions and staying within this industry at a high level. But this sort of trend continues, right? We're seeing sort of somewhat of a repeat of 2008 here today. And so is it really, in your opinion, is it that they don't know what they're doing at the Fed or elsewhere, or is it that they're acting maliciously, or is it something else? Well,
with Silicon Valley Bank in particular, I think more than likely some of those people are going to be indicted. It turns out there were over $200 million of loans extended to a number of people affiliated with the bank just in the last year before the collapse. So I think that's going to be scrutinized heavily. I think there's a lot of questions to be asked still. But the good news is, especially with respect to Silicon Valley, it wasn't necessarily a bailout. The equity holders got zeroed out, so they didn't get really a bailout on that value. And the bond holders didn't get bailed out, and they got basically zero. So if you look at those two things, that's how it should work in a capitalist economy. people that are extending money to bad businesses get wiped out when shit hits the fan. And that's what happened here. The question is, FDIC, moves by the Fed, a program called BTFP, all of these things, it's kind of like the incrementalism that ends up turning into public money, socializing private losses. And that's what ultimately I hate to see, and most people are pretty queasy about.
Yeah, let's talk about that a little bit, because I think that, well, for one, can you define what that program is that you mentioned? And also, I think a lot of people, even like perhaps everyday people, were encouraged to see the Fed say, hey, we're going to backstop depositors, right? Like maybe over the $250,000 limit that was previously established. Why do you see that as maybe a bad thing? And also just to ask you to define that acronym.
Yeah, so without being an expert on it, the program basically just extends loans to banks. That's why we've seen the balance sheet at the Fed start to increase again despite quantitative tightening, or the reverse of the QE. Some people have called it a bailout or a return to QE. It's slightly more nuanced than that, but really just providing loans on an emergency basis to some of these banks that are under pressure so that potentially they can stem the tide of this bank run. Whether or not that'll be sufficient is another question. I think the fact that the FDIC is willing to guarantee more than the $250K at a bank like Silicon Valley potentially puts risk on the FDIC. There's a limited amount of resources there. It's kind of a quasi-private organization. They insure the deposits of the entire banking system. So if you saw this turn into a wider issue with more banks involved and more uninsured deposits that are at stake, there's a world in which the FDIC could be insolvent. And at that point, you're going to be looking at a bailout from the Fed. And that's when we're kind of back in the 08 world.
Interesting. So you're saying that if they didn't do what they did, it could have gotten worse.
Yeah, and it might still get worse. We'll see. But it's a weird time. Bank failures are almost always evidence of more issues under the surface that people aren't really aware of.
What are those issues?
Well, lately, people have been talking about commercial real estate. The vacancy rates in commercial real estate, if you look at all the metropolitan areas in the U.S., are 20%. That means 1/5 of all office space is not paying rent. There's nobody in that space. And that's covering the entire U.S., 20%. It's a big number. And the biggest lenders to commercial real estate office buildings are the regional banks that are under the most pressure right now. And so if that becomes an issue, all of these real estate loans ultimately mature and have to be refinanced. And if you're not receiving rent and you have to pay higher interest, they may not be able to refi, and a bunch of these assets sitting on commercial bank balance sheets might be underwater, just like the Treasury bonds were for this latest crash at Silicon Valley. So there's definitely risk out there, and I'm not going to pretend to know what's going to happen, but it's an interesting time, to say the least.
So I wanted to chime in. I've seen some people in the Austrian camp have been commenting on this phenomenon of duration mismatch, where I don't know if you have anything to sort of elaborate on that, but basically, if I'm not getting it wrong, banks will borrow short to lend long, and this scheme sort of works as interest rates are falling. But now that the Fed is raising interest rates, it's causing the crunch. Is that what is creating this situation? And I mean, the Fed just decided to raise interest rates another 25 basis points. So they're kind of in this like between a rock and a hard place situation where they're trying to stop a bank run and also fight inflation and pretend the economy's just fine. And I'm curious your thoughts on that duration mismatch observation and where you see the Fed going with interest rates.
Yeah, and so Silicon Valley is a perfect example. They have a bunch of assets on their balance sheet that are long duration, 30-year treasury bonds, 20-year treasury bonds, and they bought them all as deposits came in at the very, very low interest rates that we saw over the last couple of years. So they own those assets for 30 years, and they have a bunch of deposits that are very short duration. People that pay their credit card bill and take it out of their checking account. There goes a deposit. It's fast money on the liability side, they're depositors, and it's long duration money on the asset side, all of their treasury bonds, all of their mortgage loans, all of these things that make the bank the bank. And the issue is, for example, I, knowing that inflation is a problem, have an incentive to go find yield elsewhere. I can go put it in a CD, I can put it in a money market fund, I can put it in the stock market, but I'm incentivized to take my money from a bank that's not paying anything on my deposits. And so when the Fed raises short-term interest rates, my incentive increases to leave. And that's why we're still seeing a trickle of deposits every day, leaving all of these banks that aren't paying interest rates on deposits. And so it feels like I said, early innings, and the only question is where it stops and where basically the Fed has broken something, and then we go back to Project Zimbabwe, as I like to call it.
That's a reference to hyperinflation in Zimbabwe, right?
Do you see any avenue that doesn't lead to massive inflation? Do you think there's a case for the deflation side?
Well, yeah. I mean, there's a great case for the deflation side. The overall debt levels in the U.S. economy are higher than they were pre-pandemic as a percentage of GDP and on a per capita basis, as far as I know, between federal and private debt and local governments, debt levels are much higher. And debt is deflationary. If you have to pay interest on a fixed amount of debt and people's incomes disappear or rents decline because there's massive vacancy in offices, you can have a deflationary spiral. It feels like almost a binary outcome. You're going to break something and end up in deflation, and then the Fed's going to try to fix it with inflation, and there's only one direction, and it is pain in both directions.
You paint such a rosy picture, Brad.
Yeah, I think we should definitely make it more depressing at this point.
Well, I guess I had asked previously about where you think Fed's going to go with interest rates. Do you think they're done hiking?
I don't know, honestly. It depends on whether or not the banking crisis gets worse and whether or not the people at the Fed have conviction on what they're doing. I think to the extent inflation continues, I think they continue to hike. And as soon as they get a lull, they're going to pause, sit on their hands, and wait and see what happens. But there's a lot of prognostication that doesn't feel like that helpful to most people. And ultimately, I think there's just a lot of things that you can do as an individual that protect yourself. Live frugally if you can, pay down debt when the sun's shining, and ultimately just live your life. A lot of this stuff doesn't matter to the end person. If you've got a good job and you work hard and you protect yourself and make smart financial decisions, you don't have a lot to worry about.
So, and just so that folks that might not be tracking, inflation is expansion of the money supply / a generally rising increase in prices. Deflation is where prices start to go down. A contraction of the money supply, fair way to categorize that?
Well, like in monetary terms, it would, inflation would be an expansion of the money supply. Deflation would be a contraction of the money supply.
Yeah.
The rise and fall of prices, is colloquially referred to as inflation and deflation.
Right. So as we look at a deflationary scenario, what's the best case for the average person to operate in that situation versus an inflationary scenario, right? If we're going into a lot of inflation going here, how should people react to that, you think?
You're asking the hard questions. I don't generally give financial advice, but in an inflationary world, you want to have hard assets that protect you from debasement. You don't want to just sit with cash under your mattress. And in a deflationary world where you're concerned about your job, paying your bills, making your mortgage payment, then cash is king. And the more of it, the better.
But the political incentive is inflation, though, right? I mean, if as soon as deflation starts to happen, I remember 2008, that was the big story, right? There was like, we're going to go into deflation, so everyone freaked out, and that's one of the major narrative causes for TARP and the bailouts and all that kind of stuff was the fear of deflation. Mm-hmm. So
that's right.
Most likely outcome probably is an inflationary environment, just because the Fed cannot tolerate deflationary environment.
Yeah. I mean, I feel like emotion is charged through so much of this. I mean, obviously people work really hard for their money. They don't want to see their deposits put at risk. People don't put their money in the bank expecting that they have to do the vetting of where the bank is investing their money, right? So it makes sense that people would want to have security and assurance that their money is going to stay there. But I think you raised a really good point, Brad, regarding, the fact that if you are living your life in a frugal way, or you're making responsible financial decisions, that it's going to be okay, right? And we don't need to, most people don't need to feel a ton of fear surrounding these events, because I think the fear of the events can almost be more powerful than the events themselves, right?
Well, when the Fed says everything's great, is that the dog wagging the tail, or the tail wagging the dog, right?
Right.
They're trying to build confidence so people don't make decisions that actually create the world they're trying to avoid.
Right. They don't want to stampede the herd, as they say, right?
Right.
This episode is brought to you by our friends at Zesty Beverages. They're on a mission to the standard American diet by crafting drinks with fewer calories and more nutrients from real food. Their lineup of delicious offerings now includes Electric Peak Yerba Mate, post-biotic sodas, keto-friendly, ready-to-drink margaritas, and hard teas. Wondering what a post-biotic soda is? Well, head on over to zestybev.com to learn more and find a retailer near you. Once again, check them out online at zestybev.com. That's zestybev.com. Henry, any more thoughts on what's going on here?
I guess I have one. So, and maybe a second if we have time for it. But so one of the things that has really drives me nuts over the last couple of weeks, and it's the predictable response that whenever something like this happens in the economy, you see the regulators come out and say, well, this is because of some, minuscule regulation that was removed. It's always the fault of deregulation, or this is the fault of, this is capitalism needing another bailout. And, it drives me crazy when you've got this situation that's been produced by over 100 years of central banking and, crazy monetary experiments, one after the next, and ever increasing regulation. And, we live in this, kind of open air insane asylum of an economy created by these malincentives. And nonetheless, it's a very popular narrative every single time this happens to blame the market and blame quote unquote capitalism. The word capitalism itself dates back to, like popular usage. I don't know if it was actually coined by Karl Marx, but it was certainly brought into popular usage by Karl Marx. And it's essentially intended to be like a derogatory term. And, whenever you've got this ever increasing government overreach, capitalism's always there to be their boogeyman. So I don't know. I wanted to bring that up and, hear what you guys have to say.
I have an interesting parallel there that I think is fascinating. So, East Palestine and SVB.
Yeah.
East Palestine happens. Immediately say this is because of a Trump era regulation that they didn't implement that Obama proposed should be admitted, but they never, actually implemented. And then it comes out and that gets a bunch of press. And then it comes out, actually, that wouldn't have changed anything. Right. Same thing here. Dodd-Frank happens. SVB fails. They say, well, this is because, they reformed Dodd-Frank in order to not kill off all the small banks. And the SVB happens, and then immediately they say, well, this is because Dodd-Frank was changed. And then a day later, it's like, well, actually, Dodd-Frank would have made this difference, right? It's the same story over and over and over again. It's this weird pattern recognition thing. Am I right about that, Brad? Would Dodd-Frank if it hadn't been changed, would it have kept SVB from collapsing?
I'm not well versed in the intricacies of Dodd-Frank, but the funniest thing to me, the capital requirements that are placed on banks to make sure that this type of thing doesn't happen, they tier it. They call it tier 1 capital, tier 2 capital. And the highest tier of capital are treasury bonds. And one of the main issues at Silicon Valley Bank was treasury bonds. And so you can ask for all the regulation you want, but if you don't look for the root cause, and the root cause is kind of 3 years of absolute insane Project Zimbabwe monetary policy, you're not going to diagnose the issue, and you're going to be creating solutions to problems that don't exist. That's always the case with most of these regulations, and definitely the case here.
And when you say Project Zimbabwe, what you mean is shutting down the economy with COVID, printing up a whole bunch of extra dollars and giving them to people and say that's going to stimulate the economy, thus increasing the money supply, increasing all the inflationary pressure. And then the Fed going, oh, wait, we can't do that. Turn up interest rates in order to turn down the inflationary pressure. And then we find ourselves in the current situation when they're holding a bunch of bonds that are now not as worth as much as they used to be, and they can't pay off what they need. Is that fair?
Almost without fail, the one crisis sows the seeds for the next crisis. That's what has happened here. And the funniest thing to me was, I forget who it was that talked about running off the Fed's balance sheet, called it watching paint dry, suggested that it was going to be easy. And literally quantitative tightening, which is one of the reasons that interest rates spiked and that value of commercial bank assets declined, causing this banking crisis, was because of QE and then QT. And it's as simple as that.
So it's safe to say that the centrally planned policy of setting interest rates and other monetary policy from the Fed is a direct cause of the problems, this boom and bust cycle we find ourselves in. What's the alternative look to that? I mean, what is the market solution there?
Well, what's most frustrating to me is if you look at reserve requirements at the bank, basically the amount of loans that they can extend per every dollar of deposits, it's been lowered over time for political reasons to goose the economy, to drive economic growth that's credit fueled, basically increase loans, increase economic activity. This is policy that's set at the federal level, and it basically pushes fractional reserve banking to its furthest extent. It says you can make 10-to-1 loans for every dollar of deposits, and it increases risk in the banking system. So then you have to have FDIC insurance to make sure that the bank system is stable. And then when the FDIC is insolvent, then you have to bail it out with some sort of federal program. Basically, there are ways to run banks in low-risk ways like a public utility, but we choose not to do that. There are probably some market mechanisms that you could implement, but in the world we live in today, there's massive moral hazard. There's no reason that a bank is going to take low risk because they will not be competitive with everybody else who's extending loans right and left and taking the risk. Because those banks get bailed out, they get backstopped, they get a federal program typically, and there's no reason to run a bank in a safe and secure way, but it could be done.
Especially because you have FDIC, right? That creates a reason why no one would ever create a non-fractional reserve banking bank. And for the listeners, fractional reserve banking is I have a certain amount of money in my savings account. I can loan out X amount more than that, thus increasing the money supply through debt. Right? So I have $10, I loan out 100, I'm leveraged, what Brad said, 10-to-1. Right? So that what that does is it's part of the low interest rate environment creates a tremendous incentive for lots of that to happen. A high interest rate environment buckles down on that a little bit, correct? And so we have less of that. So we're trying to cool and heat the economy with those decisions. Now, one of the interesting things that I've seen is that there's a debate about whether or not an economy can function without fractional reserve banking.
I've seen a number of people that are smart people that I respect in the liberty movement have even called for outlawing fractional reserve banking. And I've been around the Austrian economic space long enough to know that there are kind of smart people on both sides who will make the case that, like, in a free market, a bank could have fractional reserves, and it's just depositors have different risk tolerances. There's nothing, going against the non-aggression principle about that. You could choose your bank you want a safer bank, if you want a bank that's going to give you a higher yield, you might go with a bank that does fractional reserve, or you might choose a bank that's 100% reserve. But it's like everything else in the hands of government. Low interest rates in a free market are great. Low interest rates forced on the market by the Fed is a nightmare. Fractional reserve banking, in a free market, I think it can work fine. But when it's imposed and made a systemic, thing throughout the entire banking system, it creates problems. But I don't know. I'd be interested to hear if you guys, agree, disagree.
I think there are smart people on both sides of that question. In a world in which you didn't have this moral hazard and there was no guarantee of a backstop and no bailouts in 2008 and no bailouts this time around, there's probably a world in which some banks make a business decision to bank on a fractional basis, and there's an incentive to do that because you get to extend more loans, earn more interest. But the banks that overextend go bankrupt. The creditors, the equity holders get zeroed out, and any depositors that are uninsured or over a certain limit lose some money. And there's a mechanism in which banks are governed by risk rather than by moral hazard. And today we're in one world with moral hazard rather than the other.
Absolutely.
Brett, I'm curious, or for everybody, I'm actually curious how we think that the rise of BRICS, which is this sort of alternative, power block of Brazil, Russia, Iran, China, and Saudi Arabia, and potentially the decline of the petrodollar impact the broader macro picture as we see the U.S. banking system sort of teetering here. Are those two things linked in any way?
You're asking the big questions.
I try to do that sometimes.
I think the I is India, not Iran.
Is it India? I'm sorry.
It's India.
I'm sorry. You're right.
But yeah, it's to give the background while Brad is gonna give us the real insight. BRICS was a financial category at first, where it was like, these are the emerging economies that you should think about investing in, not think about thinking, think about investing in as you're trying to grow your investments here domestically in the United States. It became kind of an informal system of economic arrangements. For example, they created their own competitor to the IMF, International Monetary Fund, and they have their own almost WTO-like trade arrangement that they are trying to do to integrate their economies. There's also some currency trade agreements. For example, India and Russia have a trade agreement on money that allows them to easily move money and exchange money across the ruble and I'm forgetting India's currency right now.
It's a rupee.
The rupee, yeah. So that's what BRICS is right now. It isn't like, some people go a little too far on that. I've seen like online, right, people will say like BRICS is NATO for those guys or something like that. That's not even close. But it is an interesting competitor, especially when you look at China's relationship with Saudi Arabia and how that's developing. If Saudi Arabia has said it's interested in using the yuan, the currency in China, to trade in oil, if that happens, that would be a major blow to the US dollar and other phenomena. So Brad, what do you have for that? Am I right?
I read a book many years ago called, I think, Exorbitant Privilege, and it was about the U.S. dollar system and the depth to which dollars flow in business transactions globally. It is a system that is low friction, extremely efficient, and beneficial to business people globally. And that type of system that has massive network effects takes a long time to unwind. And now there's a lot of things where you could say there's a crack. We're starting to see it teeter. And I generally buy some of that logic. At the same time, the vast majority of all trade globally happens in dollars. Most currencies are inferior currencies to the US dollar. We have a Fed that manages monetary policy generally tightly relative to other currencies. The yuan is on like a managed exchange rate system. The Russian ruble's a piece of shit. The Indian rupee, I don't think, is going to take over global trade. the dollar is here to stay for a long time. I just don't buy the logic that some totalitarian group of poorly governed countries that no one wants to hold the currency of is going to take over. And that may be true in 50 years or 100 years or even 25 years if things really go haywire. But it's not a 5-year problem or a 10-year problem. And in general, we're all very lucky to be paid in dollars and deal in dollars because the benefits that it affords us when we travel and when we buy goods overseas and we trade on a global basis, it's massive. That's why it's called exorbitant privilege.
You're making Kyle cry. I mean, he's really looking at how Bitcoin can take over the dollar in international exchange at any given moment.
I was actually just going to add in there that today was the big China and France had completed their first gas trade using the Chinese yuan. So there is like a European country that did participate in, a gas trade of that wasn't dollars. So,
did they sell gas or buy gas?
I am not sure.
Who buys gas from France?
Well, China's an importer of energy, and I would bet that China paid yuan for the energy, and then immediately the yuan was converted to U.S. dollars.
Probably
Not the
true.
franc? Come on. No, euro. They're on the euro.
I mean, I think it's interesting. You make a really good point, Brad. I mean, whenever there is unrest in Europe or, I mean, particularly in Europe, but elsewhere around the world, you see the dollar strengthen as investments flow into the United States, right? And so generally speaking, if there are dominoes to fall in this equation of, the global currency system, collapsing and restructuring, the U.S. will probably be last. Is that kind of more or less what you're saying there?
Yeah, it's the least bad currency. And the fact is, most global corporations, even if they generate revenues in their local currency, they borrow in dollars. So they have debt and interest payments to pay in dollars. Creates massive demand given how much global debt there is for US dollars. And so when there's a shortage of dollars, like when the Fed raises interest rates and everybody has to pay more on their debt, it drives the dollar higher relative to global currencies. And so the dollar is the hegemon of the world. And I don't see anything that's going to change that immediately, but maybe someday.
It seems like you're speaking about sort of the dollar milkshake theory. Are you familiar with that?
Yeah, I love the milkshake theory. I think that's generally right until things look a lot different than they do.
Can you describe just a little bit top level of what that is? I mean, you more or less already did.
All we know is that it brings all the boys to the yard.
Ayo. Yeah. At least
ahead.
David.
If you envision the milkshake as liquidity, it's full of liquid and it sits in an emerging market economy. And the Federal Reserve raises interest rates in the US. It's the equivalent of the Fed reaching across borders, dipping a straw into the milkshake and drinking their milkshake, basically tightening financial conditions in that country, increasing the demand for dollars to pay their dollar-denominated debts, and ultimately creating some level of financial crisis in a lot of dollar-indebted places.
And what role do you think because there's been news on the horizon about this CBDC that the Fed is going to be rolling out, and it's in some phase of readiness or lack thereof. Do you think that that is in some way part of the end game for the Fed here?
I'll believe it when I see it. The Fed is full of PhD economists, and they generally think highly of their ability to central plan and forecast and all of that. But I don't know a single person that has any issue using the dollars that they have in their bank account or the dollars they have in cash in their wallet. And I just don't, it's a solution without a problem. And so certainly there's political reasons to want it. But I don't think there's a population that wants it.
To be clear, the Fed only has like a working paper of an experiment they want to run to generate a Fed coin sort of thing.
Well, and adding on that, because I think a lot of people are conflating Fed Now with the CBDC, and Fed Now is just like a competitor to ACH rails. it's like a fiat rail system. It's not like an actual digital currency. And I think people have been conflating that a lot, is what I've been seeing.
And to clarify for anyone listening that doesn't know, CBDC is central bank digital currency. So it would be a replacement for the dollar, but it would be in digital form. And the real fear around it, obviously, is that it would have controls placed on it, right? I mean, I think that's the big thing people are concerned about, is that the Fed or whomever is controlling it will be able to say, you have to spend this money by X date or it expires, or, as it pertains to the broader idea of a sort of a Chinese style social credit score or credit system. If you say something that we don't like, we can prohibit you from purchasing certain goods or services and things. So I think there's real reason to be concerned about it, but obviously it sounds like we're not there yet.
But we also have that now in a lot of ways with MasterCard and Visa will shut you down off political pressures. They've done it before, right?
I mean, we saw PayPal say that if you said the wrong thing, they'd fine you, $2,500 or something like that.
We're already kind of in that reality in a lot of ways.
The currency is already digital. Your financial transactions are already being tracked. In fact, there's a nonprofit, and if I remember, it was Arizona, New Mexico, I can't remember which, that has been just group building, like just buying up and collecting data of Americans' financial transactions and just storing them, right? Probably for use by intelligence agencies and other folks. So that's speculation on the latter part of that, but we do know that, right? There's a Reason article about it. I kind of agree with Brad in the sense that it doesn't seem that our current system doesn't have all the features of what a central bank digital currency would have anyways, because if the government wants to know what you're buying, they can get it. If they want to give you a hard time about it, they can, right? So,
well, I think the real concern here, though, is if it becomes a requirement to use it to be a part of the system, similar to, a vaccine mandate. If you need the jab to go to work or to get on a plane or to do X, Y, or Z, if you need to use this currency to do any of the things you would do in your ordinary life, you're basically forced out of society if you don't want to do that. And I think that's primarily what people are concerned about.
No, that makes sense. It's like the difference between, there's one person or a list of people, 30 people who are a problem, and we're going to use the mechanisms we designed in the financial system in order to punish them, versus literally every single human being in the country has to abide by a social credit system that governs the amount of your carbon footprint or something like that and creates incentives and disincentives to your behavior based upon your currency.
Exactly.
Hey, Brad, this leads me into a question. I'm curious if you have any insights into what happened with Signature Bank, because I've been seeing a lot of people talking about how this was a very different phenomenon from like SVB. I know a lot of people in or Barney Frank, who was on the board, said that it was basically a decapitation in receivership because they were a crypto-friendly bank. And it has a lot of people in the crypto industry talking about choke point 2.0. I know the majority whip in Congress has been talking about this as well. Do you have any insights into like why Signature might have been different from everything else? Or like, I'm curious what you have to say there.
So I've paid less attention to Signature Bank, but what I know of it is that a lot of these stable coins held assets or deposits at Signature Bank. And I think there's a lot of political motivation recently to tighten regulation on crypto. I know that's not a positive development for a lot of the crypto bros out there.
Kyle is a crypto bro, just so you know.
Very true.
Actually, he identifies as a degen. Let's use his pronouns, guys.
Yeah.
Well, I am sympathetic to the crypto bros.
Just as a little bit of context here. So Brad is the first person who ever told me about Bitcoin back in 2000, I believe it was 2009, when it was like an emergent phenomenon.
Oh my God, guys. Could you imagine if we'd actually done some Bitcoin mining that one day when we were all hanging out, making calls for Juan Paul, and we were like, we should do some Bitcoin. We're like, I don't know, it seems complicated. We never did it. Come on. What were we thinking?
I never made any money on it. I'm an ideas guy. I like the ideas more than the execution.
Well, it was like impossible to like figure out how to buy it. Cause I remember I was like, oh, well, Brad's a smart guy. He's like one of the smartest guys I know. So I might just like throw $100 at this. And if I had done that, it would have been worth, many millions, but like
No, but you would have bought it through Mt. Gox exchange, and then it would have been
Lost it all
hacked,
in Mt. Gox.
and then you would have lost it all.
Yeah.
So Brad,
So I actually saved you a lot of hardship.
this is even worse. I might have told you guys this story before, but so I did buy Bitcoin after you had turned me onto it. It was right around 2013 or 14, and I rode up a little appreciation wave, whatever one of those first little rallies was, and I kind of sold into the rally. And I had some left, and I was like, well, that was fun, but I don't know, this is kind of could go to zero, and so I'd rather get something out of it than nothing. So I went on overstock.com, which is one of the only websites to accept Bitcoin, and I bought an office chair, a shitty pair of shoes, and a shitty watch, and I don't have any of the three any longer. And I think I probably spent like a Bitcoin and a half on those things.
Ooh.
Yeah. My first Bitcoin purchase was a piano. So
Really?
yeah, I can't remember where I bought it from. It was some sort of like an Amazon affiliate
Like
program
a keyboard,
thing, yeah.
like a
big keyboard. Yeah.
Okay. Well, that's at least, you can get some enjoyment out of that.
Yeah.
It was a comfortable chair though, I will say that, but that was about it.
$250,000 chair right there.
Depending on the time. Yeah. Yeah. I look back on that fondly. You have to laugh, right? Brad, I'm curious actually, we kind of just barely grazed off of, the whole world of ESG and climate investing and stuff. Like I know things are kind of in flux there right now, and the attitude maybe has shifted in that space. What are you seeing on that front?
So in general, people are excited about ESG still. I think if you look at the flows of funds into asset management products, investment products that are ESG, the numbers tell the story.
All right. Well, it looks like we lost Brad. Some technical difficulties here. We'll see if we can't get him back. In the meantime, we do want to touch on the unfortunate shooting in Tennessee recently.
I wouldn't mind talking about the right wing all of a sudden deciding that
exactly.
collectivism is the way to go about talking about this.
And supporting red flag law type
God,
steps.
that
Like
ticks me off.
they're dancing around that.
How did they do that? What did they do?
Well, they're talking about like, you shouldn't be able to sell, essentially shouldn't be able to sell guns to like trans people.
Oh, come
Because
on.
they're mentally ill, right? That's the argument.
Well,
So dumb.
where do you draw the line though when it comes
That's
to
the problem with red flag laws. Who decides who's crazy?
Yeah.
Well, but seriously, where do you? I guess the two sides of it would be, well, someone has to decide. Someone has to draw a line between, well, what is mental illness and what is not, right? Which anxiety is a mental illness now. Like,
in the Soviet Union,
so,
disagreeing with the government was a mental illness.
right? And so someone has to make that decision, or we have to go to this like libertarian utopian Wild West world where everybody just has a gun on them at all times to protect themselves from all the crazies who probably also have guns on them. Is that like?
Well, that's kind of the problem. Is like once you say you can't have a gun, then you just buy a gun on the black market. You're not actually removing guns. You're just removing guns.
Where did Audrey Hale get her
completely legally
firearm?
There's no gun law that currently exists or has been proposed that would have prevented them from doing it, other than an assault rifle ban. Even then, they had a handgun. So.
Oh, also
yes,
had a handgun.
Yes.
Oh wow.
So it isn't clear that so there an adult looks at the world. Are we recording right now? Are we actually going right now? Oh, okay. An adult looks at the world as there are situations that you cannot get to a perfect solution. There are trade-offs to everything. The question is, what trade-offs would you rather have? What downsides would you rather have to the world that you have? Because there's no utopia, there's no perfect solution. And in the Second Amendment space, the reality is that if there's someone who wants to harm someone else, they will find a way. And there's no way to just have a singular solution or even a multitude of solutions that's going to solve that. So I don't know, man. I think the reaction to it is probably the most, not beyond the act itself, has just been horrendous. It's been terrible. You got both the gun grabbing people standing on the bodies of children saying that this is the reason why we should have our political agenda done, which I think is just gross and disgusting. And then you have the right wing saying this is why transgender shouldn't have Second Amendment rights and just abandoning their principles. And that's also disgusting. That's just wrong. The solution, if we're going to talk about solutions, seems to me to be, how do we do a better job about helping people who have resentment, anxiety, and mental health issues around that resentment question that would drive someone to do this in the first place. Which I don't know with the shooter's motivation, but I assume it's somewhere in the resentment area because that's where most shootings.
She like wrote a manifesto and it hasn't been released, but
right, which is also interesting, right? Because why do governments tend not to release the manifestos of shooters? Well, I could see why. There's a perverse incentive, right? You make this person famous, and then make their rationale famous. And in fact, the Unabomber's manifesto is all popular on the internet in the last couple of years.
Is that right?
Yeah, and it's just certain factions of the right wing on the internet, and it's all Luddite, like anti neoliberal stuff. And so people kind of look for folks that are popular or not popular is not the right word, but infamous. And they associate that with I want to understand this person's motivation. And then the argument is that then it encourages more people to do terrible, horrible things. I could understand that.
Yeah, no, absolutely. Well, and then,
before we move on from that, I think there's also like some interesting like statistical things to unpack, where you'll see, the gun control side will say, they'll show a chart where it's like, here's all the shootings that have happened, mass shootings or school shootings or, just shootings in general that have happened in America compared to other countries. And, these statistics are always, for example, if you see something that shows gun deaths, typically that includes a lot of suicides. Or if you see something that is mass shootings, typically that's a lot of gang violence where multiple people were shot. And they always leave out a lot of these very notorious ones occurred in gun-free zones. So the solutions that they want to impose on us wouldn't have done anything anyway.
The other one I don't like from the right has been, the solution is just to place a police officer in every school, which is also problematic. It also has terrible unintended consequences. The more police officers in a school doesn't necessarily, one, make the school safer. We know that from the one where the police officers refused to go in and stop the shooter. I can't remember. Yeah. And then two, there's an interesting study from the ACLU and other groups about how school resource officers, the more involved and the more there are, the more criminalization of student behavior there is in the school, and the more on-ramps there are to criminality, or at least incarceration and therefore criminality out of the school. Now, that could be measuring the wrong thing, right? You have officers are where they're at, right? Because there's a higher criminal element in the school, but there's also, potentially more violence in that situation. So I don't know what the right answer is there. I think at minimum, a state of freedom where people can make calculations on risk and safety that best serve kids. And as a parent myself, like, it's terrifying, the idea of someone wanting to do harm to little kids, right? I'm like, because they're not around you. You can't be there to protect them. Mm-hmm. I do get where people are coming from with that. But I'm not sure that that's necessarily the central solution. What we need to do is allow schools to make this calculation for themselves and figure out the best way to do that.
I guess the last thing about this, the stats, I think what you really want to look at if you're like comparing countries and crime statistics is violent crime overall, because you get gun bans in the UK and knife crimes go up, and then you get a knife ban and then screwdriver crimes go up. So it's there's always an element of crime out there. The question is, how do we minimize it?
You minimize crime by creating a society, encouraging a society that manifests itself as with the ability to have every individual contribute. That's how you do it. You don't criminalize drugs and then prosecute a war on drugs in neighborhoods and cut everybody out of the job market and then get surprised when people go to the black market.
Yeah.
Right? There's all kinds of terrible public policy that encourages people to be in this situation that winds up with violence. Let's address those first. All the barriers that people have to starting a business or to doing something that they want to do that doesn't harm anybody else, that isn't selling them crack, right? Let's address those first. And a lot of those reasons why those barriers exist in the first place are all well motivated too, but they're all well motivated in a way that is centralized control of the individual on behalf of a special interest. Get rid of that, and then you have a situation where it's safer and more fulfilling if I go and I serve someone else's needs in a free market. That is why free markets are not just good because they're efficient and they deliver goods and services to people. Free markets are good because they allow individuals to realize their potential and serve one another in mutually beneficial ways that makes the world a better place. That's why it is. We're moralists, right? We're not just guys out there just with, glasses on saying, well, that's a slightly more efficient, distribution of goods. No. We're advocating for a better world that allows every individual to contribute. And when everyone can contribute, people are less likely to build resentment and commit these terrible things. And that means that's also not just the progress material, that's also moral progress, tolerance and openness, like the virtues that allow people to say, not build up that kind of resentment. I just, if we focus on that, I think we're in a much safer place to not have the unintended consequences of, policies like banning guns and, or keeping transgenders from buying guns. That's terrible.
That is terrible. Any final thoughts on that?
Yeah, I want to bring up Coase theorem once again because it applies to the issues of crime as well. So all crimes are property crimes, whether it's of your personal property or your body. So once again, well-defined property rights that are easily enforceable is the Coase theorem answer to how you get rid of crime. And then the other root cause of crime is childhood trauma. And that's probably something we have to get into another time. But I mean, like these kids who are shooting up their classmates and their teachers are often being traumatized either at home or in school, or they're being put on psychotropic drugs. And I mean, as a society, we have a real addiction to abusing our youth. But again, we'll have to dive into that on a deeper level another time.
Yeah, unfortunately, I think we'll have plenty of opportunities to dissect news about that very thing because it is rampant. It does look like we got Brad back on. Can you hear us, Brad?
I can hear you, but is my audio right?
You sound great.
Oh, great.
And you look great.
Thanks.
Yeah.
Well, hey, we're about to pivot real quick. We got a few minutes left to talk about TikTok and these the Restrict and Data Acts being suggested by Congress. Do you have any early thoughts on those? I know they've kind of just come across our radar.
Oh. Well, the headlines that I've seen are that this is the most obscene piece of legislation since the Patriot Act, and arguably more obscene. They're talking
the analogy. Oh, sorry. Sorry, Jeff.
Go for it.
You were.
Go for it.
I was just gonna say the analogy is really good of the Patriot Act. I mean, at first blush, it wouldn't be, but think about it. We have someone we're afraid of. In this case, in 2001, it was Al Qaeda, right? For good reason. And then we have the political solution is just give us all the power we need to do anything we want to do, and we'll keep you safe from Al Qaeda. That's what it is now. We're afraid of China for some reason. Way less reason than we have to be afraid of Al Qaeda. And the solution isn't, and you could write this law. I've read plenty of federal law. If you just wrote a law, no company owned by the Chinese can operate in the United States. That would ban China or ban TikTok. But we didn't write that. That's not the law they read. They said, allow us to regulate any amount of free speech on the internet that we want forever on any company that we want.
Yeah.
And they call that a TikTok ban. That is classic federal government abuse.
Yeah. I mean, it's fuck that bill. But I will,
Where's your beep button, Evan? We need that.
that bill. But I think the reason why people are so, who would want to ban TikTok is because of the amount of influence TikTok is having on our young people. And it's they have a massive ability to influence, essentially brainwash and guide our young people to be making really foolish decisions. Whereas, you compare with what they promote in America versus what they promote in China, it's night and day.
I hear that claimed, but I've never actually seen evidence of that. Like, do we know that's true?
There's evidence of, what is going on TikTok in America is buffoonery.
Well, but that's
okay.
I mean, if you use TikTok, you can see all kinds of stuff. My TikTok is full of Brazilian jiu-jitsu competitions. I don't know what people are talking
and
about.
that's exactly my point. How much of that is causal the other direction, that American youth are just into really inane bullshit, and Chinese youth are perhaps by force of their parents or otherwise, more interested in science and technology.
Yeah, I mean, I don't know, but like the CCP, does have an agenda, and I mean, they will try to. They definitely, it's in their interest to like weaken America, So, I mean, there is like.
Is anybody familiar with the story where there was pressure applied to, I think it was a journalist. They were using information from TikTok installed on someone's phone to potentially track someone in the United States, a U.S. citizen?
I remember hearing about this. I'm not intimately familiar with it, but it does raise the point, Brad, that is it more appropriate for the government, be they state, local, federal, what have you, to ban TikTok on U.S. government devices? I think that makes more sense than this very broad strokes bill to ban TikTok from users' phones, which gives them, I mean, just powers that are going to inevitably creep as they always do. I mean, especially when they're saying steering policy decisions, people that people that are attempting to steer policy decisions in a foreign government's favor, like that clause right there, that could be interpreted so broadly. But is it more reasonable for them to ban them from government devices than just from everyone's devices?
Something I'll expand on what Brad just said there, actually. So the story there that he was talking about is that TikTok admitted that their employees were in fact using their app to track journalists that were reporting on their ties to China. Mm-hmm. So the journalists were reporting that TikTok has these ties, and then TikTok was tracking that journalist, right?
Thereby proving
show some malicious intent there, right?
Absolutely.
If China does blackmail operations or other kind of operations against American citizens, it is perfectly the just role of the United States government to protect American citizens and say, hey, knock that off, or there's going to be consequences, right? Fine. That is where that happens. I'm not sure that happens where we say the government has now the power to regulate all the internet speech and create a massive incentive for more private censorship on these platforms, right? Which is exactly what the opposite of the Republicans who are driving this TikTok ban want.
Right.
It's classic. It's blanket regulation on what kind of software you can willfully install on your phone. If you want to put spyware all over your phone, by all means, do that. But like to say that the government can legally, I would imagine that this gets challenged by SCOTUS, but like, to say that the government can determine what software is on your phone based on some sort of geopolitical ramifications that the government is worried about, that's obscene, insane. It's the craziest thing I've heard in a long time.
Well, it's something that we've missed, right? I mean, back in the day, and I sound like an old person saying that, but we used to have this dream called the free internet. We used to have this idea that there would be a place where we would be able to do what we want as long as it didn't harm anybody else, right? And we're seeing that go away now, right now with this bill. That's what this bill means, because it's not just TikTok. It's every other company on the internet if they allow user-generated content. If you sell a book on Amazon that criticizes the Ukrainian the effort in Ukraine, is that encouraging of foreign actors' interests?
Exactly.
I mean, that's nuts. That is literally that is suppression of speech.
Well, and it is classic use of a crisis in the form of the Chinese threat to leverage that crisis to create a broader wedge that just grants the government much more broad strokes control, just like the Patriot Act. Mm-hmm.
And I'm not trying to be naive about the Chinese, right? I'm not saying that the CCP is great.
Well, no, it is a threat for sure. Right. There are things to be concerned about, but this is out of scale, and it's going way beyond what would need to be done, like you mentioned, in order to neutralize that threat.
Right. Well, and of course, what the government would do is say, in order to protect you from foreign actors, we have to dominate your life, which is just the wrong solution. If they're going to protect us from foreign actors, maybe we should use the world's largest intelligence agency to protect American citizens rather than spy on them.
Hey,
maybe we should use the world's largest and biggest defense budget to protect America rather than starting a war with China in the South China Sea. I mean, like, there's a million different decisions we could make other than this that would reduce tensions with China and encourage trade cooperation and peace. But instead, we're going exactly the opposite direction.
Again, it raises the question, is it ignorance or is it malice? Because I think it's got to be one or the other, right? Or maybe a little of both?
Can be both.
Yeah. It must be both.
I do want to add in here one, the CCP is on the board at ByteDance, which is TikTok. But also adding on to what you were saying, Dave, inside the bill, it would make it a criminal act to use VPNs to gain access to apps that are banned, and it would be a penalty of up to $1 million or 20 years in prison. So like even if you're, like regular people use VPNs for, to be in a different geographic location for like Netflix to see a different TV series or something like that, using a VPN could be a criminal offense if this goes through.
I guess what I would add is I think what I would want to see is parents making the decision, to, if they don't want their kids, on TikTok, that making the decision to prevent that from happening. What we would like to see is some company could come out with like a device, a phone that, parents could regulate what kind of apps could be downloaded.
Already exist, bud.
Yeah.
Already exist. Yeah. Those are already things that happen. We actually have an obscenity bill right here in Montana right now to force cell phone companies to put in those apps, and then you have to get permission validating your age in order to access certain apps and get on certain websites and stuff like that. Rather than saying, hey, are you a pornographer? Well, you actually have to verify that people are 18 plus in order to view porn, right? So they instead go to the cell phone company because that's the easiest. No, I want to make one more point. What is the future vision? What is the alternative vision of this? The alternative vision of this, in my opinion, is a competition between the algorithms. That's the best bet, right? If people are aware, they know what algorithms are now, we're no longer naive to that, right? If they're aware that some algorithms are influenced by the CCP, allow them to make the free choice about what they want to consume as adults, right? Parents should, of course, govern their kids.
Yeah.
But by narrowing the range of algorithms you can choose from, you're not actually creating a better outcome. You're probably creating a worse outcome because, believe it or not, TikTok has a great incentive to actually not de-emphasize our videos where we criticize the Fed boys or the intelligence agencies, right?
True.
So like I would much rather be able to put it onto that platform. I mean, what happens when they come after Rumble or someone else because they have anti-government stuff on? So
and they will.
Saying, yep.
Well, it's a slippery slope and it's a developing issue, and obviously there will be more to talk about in the weeks to come. But for today, that's all we got time for. And Brad, thank you so much for joining us and offering us your insight. We would love to have you back sometime in the future.
It's been a pleasure. Thank you very much.
Thank you. Everyone check out Brad's Instagram. It is amazing.
Instagram?
You guys
You're going to dox me.
Oh, really?
You're going to dox me.
Oh, come on. I didn't know that. I thought it was public, bro.
Brad is seeking to preserve his anonymity so as to protect himself.
You don't want to be famous, all 44 subscribers? Come on, man.
The woke mob is a bitch. But we'll take the bullets for you, Brad. We appreciate you very much.
I already doxed myself to be part of this, so you can too, man.
All right, guys. Thanks so much for watching. Thank you, too, for being here, and we'll see you guys in the next one.
Peace.
Thanks for tuning in to the Liberty Portal podcast. For more episodes, news, and Liberty-focused content, visit libertyportal.com, and be sure to follow us on Twitter and Instagram. If you like what you heard on the show, we appreciate you sharing it with your friends and giving us a review on your podcast platform of choice.